Hey everyone, welcome back to Corporate Decoder. Today KINS just filed a Form 8K, and there is a significant change in their auditor that I want to break down. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is switching auditors, and the reason behind it reveals a past issue with their internal controls. So Kingstone Companies Incorporated, or KINS as you might know them on the stock market, has made a big move regarding their accountants. On the 18th of August 2026, they announced that the audit committee of their board of directors decided to hire Deloitte and Touch LLP, or Deloitte for short, as their new independent registered public accounting firm. This is for auditing their financial statements and how they manage their internal controls for the year ending the 31st of December 2026. At the same time, they let go of their previous auditor, CBIZ CPAs PC, also known as CBIZ CPAs. The audit committee approved this decision to dismiss CBIZ CPAs. Now, why the change? The company mentioned that in choosing Deloitte, they looked at things like Deloitte's specialized experience in the insurance business and the amount of resources they have. This suggests Kingstone is looking for a firm that really understands their industry. This isn't the first auditor switch for Kingstone recently. You might remember back on the 8th of April 2025, their auditor at the time, Marcum LLP, also known as Marcum, resigned. That happened because CBIZ CPAs bought Marcum's business that handles audits. So, CBIZ CPAs stepped in back then. Now, let's get to the meat of why this auditor change might be happening. The report states that CBIZ CPAs did not give a negative or qualified opinion on Kingstone's financial statements for the year ending the 31st of December 2025. That is generally good. However, there is a catch, and it is a pretty important one. The filing highlights a specific issue from the past, as disclosed in their annual report for 2025. Filed on the 16th of March 2026, CBIZ CPAs issued an adverse attestation report on the effectiveness of Kingstone's internal control over financial reporting as of the 31st of December 2025. An adverse report means they found serious problems. The reason for this was a material weakness. Simply put, a material weakness means there is a significant flaw in the company's system of internal controls that could lead to errors in their financial reporting. Specifically, this weakness was due to not receiving a service organization control, or SOCI 1 Type 2 report. These reports are crucial for companies that use third-party service providers for key functions. In Kingstone's case, they were missing these reports for their insurance premium quoting platform and their general ledger system. This means that the company didn't have enough assurance that these critical systems were operating effectively and reliably, which is a big deal for a financial services company. The good news is that the company and CPIs didn't have any major disagreements about accounting principles or financial reporting issues during their time together, apart from this internal control weakness. And it seems like this weakness was discussed with the audit committee. Kingstone has also given permission for CBIZ CPAs to fully answer any questions Deloitte might have as they take over. This is standard procedure and helps ensure a smooth transition. The company also stated that they did not consult with Deloitte on any accounting matters or potential disagreements before this engagement. To wrap up the auditor change details, there is an exhibit filed with this report. Exhibit 16.1. This is a letter from CBIZ CPAs dated the 24th of August 2026, addressed to the Securities and Exchange Commission, or SEC. This letter is where CBIZ CPAs confirms whether they agree with the statements Kingstone has made about their dismissal. And of course, the filing includes the standard cover page information in an interactive data file format, which is usually for regulatory purposes. Looking at the broader picture for Kingstone Companies Inc. KINS, they are in the property and casualty insurance business. Their market cap is around $291 million, with a P/E ratio of about 8, and their stock has been trading around $20. The company has about 113 employees. Recent news shows they recently beat their Q2 earnings estimates and have seen some analyst upgrades, with one rating going to strong boy on the 16th of August. However, there have also been discussions about rising risk questions and stock pullbacks following record profits, as noted in some headlines. This auditor change, particularly the disclosure of the material weakness in internal controls, sheds more light on the risks involved. Having a strong internal control system is fundamental for any financial institution, and a material weakness, especially related to core systems like quoting platforms and general ledgers, can be a red flag for investors. It suggests potential vulnerabilities in safeguarding assets or ensuring the accuracy of financial reporting. The switch to Deloitte with its insurance expertise might be a strategic move to strengthen these controls and rebuild investor confidence. Investors will be watching closely to see if Deloitte's engagement leads to improved internal control reporting in the future. The previous adverse report on internal controls could be a lingering concern for shareholders, and the market's reaction to this news will be telling. The fact that they are proactively addressing this by bringing in a regarded firm like Deloitte suggests they are taking the issue seriously. However, the underlying cause of the material weakness, the reliance on unverified third-party systems, is something that needs robust and sustained attention. In my opinion, while beating earnings and getting analyst upgrades are positive signs, the auditor change and the disclosed internal control weakness are significant. The company's direction seems to be focused on growth, as indicated by recent positive financial results. However, the risk associated with weak internal controls cannot be understated, especially in the financial services sector. My biggest concern is the potential for future financial misstatements or operational disruptions stemming from these control deficiencies, even though they are now moving to a new auditor. What I am actually looking for is a clear demonstration over the next year or two that Kingstone has successfully remediated these material weaknesses and that their new auditor, Deloitte, provides a clean opinion on their internal controls. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you found this analysis helpful. Please like, subscribe, and join our Discord community linked below.